everybody, I am Attila Tanner. Welcome to a brand new video of Next Stock. I hope you're all doing well. 2 weeks has passed since the last video and we have now completed Q1, quarter one of 2022 from January 1st to March 31st. So I feel it's a good time to look at how the different indexes in the Canada and US has fared and just to give us a little bit of an update on how those things are looking. So let's start with TSX, the Canadian market. They had a good quarter, 3.1% up, which is surprising because the US market has been more down. Dow Jones index was down 4.6% and S&P 500 index is also down 4.9% and Nasdaq is really bad with 9.1%. So if your stock portfolio has been going down this quarter one, you're not alone. This has affected everyone. But hopefully this doesn't stay like this forever. Q2, Q3, and Q4, we hope things will improve. Even though things can look bleak, there is always opportunities. So hopefully this report can give some insights on what's ahead. Before jumping into the regular reporting, there were some companies that reported, so we can look at some of those highlights. Micron Technologies reported their year-over-year sales was 25%, and my target rate for them is $98, which is has a little bit of an upside from current trading levels. The electrical EV companies from China, NIO, reported good year-over-year sales growth of 53%. My target rate for them is $43, which is a good upside from where we are now, more than double. Another electrical car company from China, XPENG, reported impressive year-over-year sales growth of 208%. My target rate for them is $49, which is a good upside from current trading levels. Walgreens reported year-over-year sales declined 7%. My target for them is $45, which is where they are trading currently. All right, that's the highlights for this time around. We're going to go into the regular reporting. We start with the US market and we start with the value stocks. In the value stocks, so we had quite a lot of changes. Meta Platforms, ExxonMobil, they all dropped out from the list because their price to earnings ratio became higher than our threshold to be in the list. Instead, we have JP Morgan then moving up to spot number 1. We have Bank of America moving to spot number 2. They have a market cap of $320 billion with a price to earning of 11. Pfizer moves in also into the list as spot number 3. They have a market cap of $312 billion with a price to earnings of 14. So here we are always looking at companies who are high market cap companies with low price to earnings. These are supposed to be stable and more conservative if you want and good to have in your portfolio. Dividend stocks are also good to have probably in your portfolio if you wish to have some cash back when they are giving out the dividends. In the US market, we have one change. AT&T moves up one spot to spot number 1, while Petro China drops down to spot number 2. China Petroleum and Chemical Corporation remains on spot number 3. The growth stocks in the US market, here we have no changes. This list is made by looking at sales growth for year over year for companies, comparing that with stock price growth year over year. Then we are also taking into account the price to sales ratio to balance the list. In this long list, the top 3 are Vroom, number 2 is Peleton, and number 3 is Moderna. So they are the most attractive stocks at the moment. At the bottom of the list is the pricey ones. They have no changes. Cloudflare is number 1, Snowflake is number 2, and Datadog is number 3. All right, that completes the US market. Let's go into the Canadian market. We go into the value stocks there. So here there's no changes. Royalbank is number 1, TD Bank is number 2, and Bank of Nova Scotia is number 3. The dividend stocks in the Canadian market has one change. Tourmaline oil is number 1, like before, but Keyera comes into the list as spot number 2. And that pushes Enbridge down to spot number 3 and also pushes Bell out of the list. The growth stocks in the Canadian market is unchanged. Air Canada is still number 1. Curaleaf is number 2 and ARC Resources is number 3. The Pricey Stocks in the Canadian market is also unchanged. Franco Nevada is number 1. Their price to earnings is quite high. That's the reason their price to sales ratio is high. That's the reason they're topping the list. Cameco Corporation is number 2 and Onyx is number 3. All right, this completes the report for this time around. Thank you so much for watching. If you like those videos, please like and subscribe so you don't miss out on next one. If you have comments, please enter them in the comments and I try to answer it. If you, before making any investment decision, always gather as much information before jumping ahead. Thank you so much for watching. Until next time, bye-bye.